Whoo! Here we go. Hello and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Blind Run on the internet and Matthew in real life, and today we're going to be talking about two forks that you should really be paying attention to if you are a cryptocurrency miner, or even if you are somebody that trades and invests in cryptocurrency. To keep your finger on the pulse of what the miners are doing is always a beneficial thing. That being said, we're also going to be talking about one specific token that is from the ground up that you should be paying attention to, as well as we are seeing some big moves from them. And then obviously we have to talk about the end of the year Bitcoin dip. Traditionally, this happens every year. There are reasons for it, and it typically surrounds cryptocurrency miners and of course offloading Bitcoin before the end of the year to take final profits and basically play with all of their tax numbers. That is what we're looking at. So we're going to dive into that at the beginning of the show. And there are, of course, more crackdowns on Bitcoin miners across the world, especially as it pertains to the stealing or theft of electricity. So we're going to take a look at that. And let's not forget about the Federal Reserve banks being tax exempt now in the United States. And yes, that does apparently translate down through every single bank. It doesn't mean like just the Federal Reserve, but all banks that are tied to the Federal Reserve are tax exempt. And that's a pretty crazy revelation that's happened there. We have two new cryptocurrency mining software releases, one from BZ Miner and one from Rigel Miner, that we'll be taking a look at. And of course, after that, we'll take a look at all of the encompassing cryptocurrency profitability and so on. This show basically works live in the fact that you guys can chat live until the end of the show. I don't respond till chat till the end of the show. So if you're expecting a response, don't worry. That's not going to happen till the end of the show, but it will happen then. The best way to get my response is with a super chat, which is never required, always appreciated, but the easiest to read because it's highlighted. And in addition to that, if you tag me at Son of a Tech, it will highlight the message orange at the beginning when you tag me. And that'll make it easier for me to read. So that is kind of the hierarchy in responses for Q&A. At the end of the show, I want to say Happy New Year to everybody. 2023 was definitely a rough year for a lot of cryptocurrency miners. We're starting to recover and there's some light at the end of the tunnel. And I'm excited going into 2024 with the halving coming up on April or in April of 2024. And then of course the subsequent, hopefully, bull market that has traditionally happened due to the halving over the next year running into 2025. Let's go ahead and get into it right after a word from today's sponsor. Today's sponsor is BT Miners. BT Miners has been a longtime sponsor of the channel and a proven reliable source for ASIC miners. If you are looking to purchase ASICs hardware from Bitcoin to Dogecoin miners, they are available for purchase on bt-miners.com. BT Miners has recently launched an app on iOS and Android that lets you browse their inventory by profitability and return on investment. Follow the affiliate link in the description and use promo code SOAT for a discount. All right. Hello. Welcome back, everyone. So once again, Happy New Year's to those that it is already New Year for. Let's get into the first topic, which is Bitcoin miners offload $129 million worth of Bitcoin in a day, sending reserves to the lowest point since May. A slump in miner reserves indicates potential selling pressure, according to CryptoQuant. Crypto miners' Bitcoin reserves slid to the lowest point since May following a spat of withdrawals this week, in a sign of mounting selling pressure as the largest cryptocurrency posts a December gain of more than 13%, data from CryptoQuant shows. Miner reserves measure the number of coins held by the affiliated miners' wallets, the number drops as the coins are moved to crypto exchanges, possibly as a prelude to a sale. Miners began balancing their books in late October, with reserves entering a decline that accelerated this month. Reserves now number 1.832 million Bitcoin being held by miners, down from October's high of 1.845 million. In a post on social media platform X, Ollie Charts pointed out that miners have sold 3,000 Bitcoin over the past 24 hours, equating to around $129 million. The cryptocurrency is currently trading at 42,891, and today I believe we're a little below that at 42,629. Yep, there we are. So just to keep you guys up to date there, down from yesterday's high of 43,710. The net flow of Bitcoin on December 28th stood at minus 1,524 Bitcoin, meaning that withdrawals exceeded new coins being minted, data shows. Bitcoin will undergo a halving in April, which will see miner rewards slashed to 3.125 Bitcoin per block from 6.25 Bitcoin. Analysts predict that the halving will cause a supply shock, with Bitcoin potentially reaching 160,000 US dollars. Now, to expand upon that prediction of 160,000, remember that's not financial advice, but from the numbers I've run based on the previous halving cycles, my top would be around 210,000 US dollars. That being said, and I go into more detail on that in my crypto mining course, but you guys don't need to get into the details if you don't want to. That being said, though, that doesn't really happen until 6 months to a year and a half after the halving. So really, the $160,000 price point hitting in April is probably not going to happen. I expected somewhere between 45,000 to 50,000 USD for Bitcoin during the halving in April. We have already hit 42,000 and got really close to that 45,000. I still think that my price point is going to be right there for that halving. If I had to put my, place my bets on what the price of Bitcoin will be in April. And then we may see a dip down as miners struggle to survive and pay electricity bills and so on, with the reward cut, and potentially another drop in ASIC miners. But that's never guaranteed. The best time to buy is always like near the end of the halving cycle. Not usually on the exact day, but we could see a little bit of a pullback and then a recovery, and then the subsequent bull market that pushes it closer to that $210,000 mark once euphoria sets in with, of course, the retail markets. That being said, we do have other factors at play here that are outside of the normal for the traditional halving cycle, that being ETFs. And we really have to see how those ETFs are going to impact Bitcoin and its price, especially large ones from companies like BlackRock. So that's a pending thing that is up in the air that could directly influence everything. The other pending factor that we need to take into account as it pertains to the halving cycle and how long this halving cycle will continue is going to be ordinals. And the reason why ordinals are important from a mining perspective and from the price prediction perspective of Bitcoin is that ordinals increase the fees on the network. And once we get to fee parity with block reward, meaning if you have a 3.25 block reward and then you end up having a higher, equal to or higher than fees, you take the pressure off of the miners from the block reward influence, which then of course levels out a little bit the impact of the halving. And with ordinals coming into play and that driving up fees on the Bitcoin network, this could have a hefty impact on how this plays out price-wise, and it's something we haven't seen before, so it's something to take into consideration. Some things never change though, and Bitcoin miners keep getting caught stealing electricity. Indonesian authorities cracked down on Bitcoin miners stealing electricity from National Grid. The thieves allegedly tapped into utility poles of a state-owned energy firm to power mining operations. Indonesian authorities raided 10 sites suspected of mining Bitcoin with stolen electricity from the National Grid over the Christmas weekend. Although Indonesia is a fast-growing crypto adopter, it's not exactly known as a hub for mining. However, under Indonesian law, electricity theft is considered a criminal offense with a penalty of up to 5 years in prison or a fine of up to twice the value of the unpaid electricity. Indonesia's neighbors, Malaysia, has made several arrests in relation to electricity theft by crypto miners, but this is among the first reported cases in Indonesia. At the raided sites in North Sumatra, authorities found 1,314 Bitcoin rigs and 26 individuals were detained. The suspects allegedly stole electricity by tapping into utility poles of state-owned electricity company PLN poles over the past 6 months, worth around 14.4 billion Indonesian rupiah. I think that's how you pronounce it. 100,000 US dollars in losses to the state. That may seem small, but it amounts to around 10 million kilowatt hours at recent local energy prices and is equivalent to yearly earning energy consumption of around 7,500 individuals in the country. What would be really interesting is if we were able to run these numbers. I didn't have time before the show to determine how much this could be, right? If we had like 1,300 S19s, how much hash rate is that? And it says over the past 6 months, I guess we could run this out not too hard, right? If we run over to like MinerStat, it could be just S9s, right? That's kind of the hard part about this, is if we looked at this from the perspective of what they're stealing hash rate for, it probably is like S9s. But how do we want to run this? Do we want to run S9s or S19s for these numbers? Let's think about it. So I think for fun, let's do S19s. Let's do S19s, just vanilla, right? Let's grab that. So we got 95 terahash. We'll multiply the 95 times, let's see, 95 times the 1,314, we come out to 124,000 terahash. If we're running 124,000 terahash, right? Power consumption doesn't matter. Just put in 0 because they're not paying for power. And we calculate that out and we do a regular Bitcoin pool. Your estimated daily would be 12,000. So if you do like 6 times 30 or whatever for fun, you have 180 days times 12,000. You end up with 2.16 million. So even if they got caught, if these were S19s, right, which they probably weren't, but even if you got caught, I mean, it might even be more profitable. They say you get caught and the fine could be double of what you spent. So $100,000, it'd be $200,000 is what they get fined for. And then you end up with 2.1 million. I mean, that's no problem at all paying that off. I mean, if we go into S9s, like what are the S9s right now? They're like 14 terahash or something like that. If you overclock them, is that correct? So you do like 14 times 3,000. What is it? Not 3,000, 1,314. 1,314. You come out with 18,000 terahash. Or is that right? I think that's right. Hold on. And then go back. Yeah. So 18,000, give or take. Calculate that out. If they're S19s, you're doing 1,700 a day. You do 1,700 times 180 or so. Well, you come out to 306,000. You still are like, if all the rigs were S9s, or S9s, not S19s, and you got them online and you mined for 6 months, you could get up to like 300,000 US dollars. If they stole $100,000 worth and the fine is up to twice the value of the unpaid electricity, you're still in profit, baby. You're still in profit. Of course, you might be in jail for 5 years as well. It's either or. Obviously, if you get the option, you're going to say, I'll pay it. I'll take my 100 grand. and go to the house. You know what I'm saying? You know what I'm saying? There you go. So let's talk about the first of two forks you should be paying attention to. And I have actually been I'm always extremely hard on cryptocurrency projects. I think anybody that watches the channel is aware of that. And there was one that came out a little while ago that was forked from Caspa that promised to be ASIC resistant and hopefully like mitigate or be FPGA resistant as well. What we found is it was pretty much a direct fork, except they added in the Blake 3 to the hashing algorithm that did temporarily push ASICs and FPGAs off, but FPGAs adapted very quickly and were on the network within like a week. And that was Carlson. The actual algorithm was called Carlson Hash. And now we have an announcement for Carlson Hash v2, a GPU optimized hashing algorithm with FPGA mitigation and ASIC resistance. We're excited to share that the Carlson team is currently evaluating the latest iteration of our hashing algorithm, Carlson Hash v2. This version is specifically designed to enhance GPU mining performance while simultaneously diminishing the efficiency of FPGAs and ensuring complete ASIC resistance. Its design draws inspiration from the Fish Hash white paper, which is, of course, going to be the algorithm that was developed for Ironfish, and then, of course, on top of that was developed by the developer of the LOL miner. So to keep in mind, this is definitely the same developer that also created the hashing algorithm for Flux and is very focused and has been very successful at both FPGA mitigation and ASIC resistance. So that's something to keep in mind and is currently being evaluated by the Carlson team. In addition to Carlson Hash v2, we are also actively encouraging the development of community-generated hashing algorithm proposals. We believe that the combined expertise of our community members can lead to the creation of even more innovative and efficient algorithms. If a community-generated proposal surpasses our own, we are committed to allocating 50% of our development fund to support its further development. We anticipate launching a public testnet for Carlson Hash v2 in the coming weeks. This will allow our community members to test and provide feedback on the algorithm before its official release. So a couple things here that I want to address is one, obviously, super bullish on this. This can also have a pretty large impact on price. Because FPGAs are so efficient, their cost to mint is lower, which means that they can afford to sell lower, which means that you add that additional selling pressure onto that particular cryptocurrency, which drives the price down. In theory, once you get those off of the network and you have a larger supply of GPUs mining, your cost to mint goes up, which then has a driving factor on the price typically to go up. We've seen this before on other coins that have had this transition back and forth. It doesn't always happen, but it is possible. It just depends on if the coin can do other things that attract the retail market, which is up in the air with Carlson Hash as it sits, because we're really the main seller of this is going to be the ASIC resistance version of Caspa. Now, in my humble opinion, there's still a large factor here that is potentially negative, on the negative side with Carlson Hash or Carlson in general. And that is the fact that it has been released with potential FPGAs on the market already. And what happens when FPGAs build up their bag and then they get kicked off the network, they sell. So you can have an immediate price impact of decrease in that cost. The other thing is what you have is basically an incentive for manipulation of the volume, and you have a community that doesn't care about the coin because they're not mining it anymore, that potentially has larger bags of that particular cryptocurrency. I would have preferred, I think, if you're going to do a project like this where your aim is to basically have ASIC resistance for a fork of something that is mineable with ASICs, is to not release the network until you have the hashing algorithm in place, which Doesn't seem like rocket science to me, but nobody appears to do ever. And I don't know why. It's just baffling to me that it's like, we're going to put this in our white paper. We're going to release the network, and we're going to straight fork it. But we didn't have the forethought of being like, oh, if this is our goal, why don't we have that goal met before we even release it? It's very weird to me, but you should be paying attention to Carlson nonetheless. I think it's the stronger of the two forks because of this, that being Pyron hash and of course the Carlson hash. Hopefully we'll see this move forward in the proper direction. I think they are looking at the correct direction, going off of fish hash, what they've done there, which of course has been developed for a long time, you know, starting with essentially Flux. So it's been around a long time as far as like the practices that are put into place there. Proven to be effective in the past, so hopefully it'll be effective in the future. The second token that we have to talk about here is going to be Hypra, aka Ethereum. The reason why Hypra is going to be interesting is that it is now the only proof of work chain to enable Shanghai. And so this is coming from Ethereum. Remember, we had Ethereum out and everybody was worried about like trying to figure out what the next proof of work Ethereum was. There was, you know, talks of Ergo, which had its struggles. We're going to be talking about Ergo in the future too, of course, here in just a second. But then you had Ethereum Classic, which went a completely different route. And then now we have basically this version of Ethereum that replaced SHA with Blake 3. And then now, in addition to that, was able to apparently fork or basically copy over all the changes and enable Shanghai. This is pretty awesome, in my humble opinion, a technical feat for proof of work mining that I think is important. It says, Hypra development team is proud to announce that the Gasper fork has been successfully activated on the cryptocurrency network. On block, after 1.6 million blocks mined, the Hypra blockchain is on par in features with the Ethereum mainnet. The Hypra network is a proof-of-work Ethereum chain that has implemented the Blake 3 algorithm, which we have covered in exhaustion on this channel. Of course, the biggest trend in proof-of-work cryptocurrencies right now is Blake 3. Everything is moving from SHA to Blake 3. This has been, you know, the thing to do for lots of reasons, including, of course, efficiency and etc., ease of use as well. But Blake 3 is kind of the new standard. A lot of people are even just forking to basically old projects, replacing SHA with Blake 3 and moving on. This algorithm is a variation of the ET hash algorithm used by the Ethereum network before switching to proof of stake, but with increased efficiency and security measures. Hypra cryptocurrency has implemented Blake 3 algorithm to achieve decentralization and prevent the dominance of specialized mining hardware. This creates a fair environment for miners and reduces the risk of centralization in the network. The Shanghai EVM upgrade is a major milestone for the Hypra, as it is the first proof of work Ethereum chain to implement this upgrade. This upgrade was proposed by Ethereum community in April 2023 to improve the overall efficiency and security of the network. The Shanghai upgrade also introduces new opcodes that allow for more efficient and secure smart contract development. These new opcodes enable features such as push 0. In comparison to other Ethereum forks, such as ETH Proof of Work or ETH Fair, Hypra stands out with its implementation of Proof of Work and now with the Gasper upgrade bringing Shanghai features onto their network. The other important thing to note here is that because of the Blake 3 implementation, also because of some of the other changes they did to the algorithm, they are a lot more ASIC resistant than any of the others, meaning even right now with ETH Proof of Work and ETH Fair, you can put Ethereum ASICs on the network. You cannot do that right now with Hypra. So there is that important note to make as well. With this accomplishment, Hypra solidifies itself as a competitor in providing fast and efficient transactions while remaining true to decentralization principles. Overall, the upgrade brings significant improvements to the Hypra network, making it a more attractive platform for developers and users alike. By implementing this upgrade, Hypra is further solidifying its position as a leading proof of work Ethereum chain and paving the way for future advancements and developments. So it does go on to say why, and I think this is important, but I do want to mention something. because of this is obviously a feat in and of itself, so I don't want to take away from that, but it's important to keep in mind that all of the things that Shanghai were supposed to bring along, like cheaper fees, faster transactions, etc., for Ethereum have proven out not to be effective. So I think you still run into the same problems of slow transactions and high fees on Hypra if given the amount of activity on Ethereum moved to Hypra. But that can also be a good thing for GPU miners because it does drive fees up, which means that GPU miners get paid out more. Kind of a double-edged sword there once you start thinking about it, right? Hypra's implementation of the Shanghai upgrade is a significant achievement that we are able to accomplish because we have an active team of experienced developers. Other proof-of-work Ethereum chains may face technical limitations or challenges in implementing the Shanghai upgrade, as they may not have the same level of experience and knowledge of Ethereum as the Hypra team. Additionally, Hypra's dedicated team of developers and community members have worked tirelessly to ensure a smooth implementation of the upgrade. The potential growth and development for the network, Hypra's achievements in implementing Shanghai features through Gasper upgrade have certainly put them ahead in terms of technological advancements among other EVM networks, which I would agree with. This could make them more attractive, make them an attractive option for developers seeking a reliable platform that offers both scalability and security without frequent disruptions or upgrades. By being the first and only proof-of-work Ethereum chain to enable the Shanghai upgrade, Hypra is setting itself apart from other networks and establishing itself as a leader in the space, blah, 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 goes on to pump themselves up. So, excuse me, the cedar is getting to me today. So obviously, the important part here is that Hypra's done something on the proof-of-work side that other chains have not done, which is obviously commendable. So it's important to pay attention to that. It's also nice that they've already moved over to adding Blake 3 into ET hash, pushing off all of the ASICs, giving GPU miners an advantage here. So 2 forks here that are really important for GPU miners to be paying attention to as we move forward. For those that are not mining it, you might want to pay attention to these 2 in particular because they will drive a higher cost to mint, which means you have more potential for growth in the future just from a purely economic standpoint. So take a look at them. That being said, we also have the announcement and launch of Rosenbridge on Ergo. This is something that we've been waiting for, I think, on this channel for 2 years, maybe longer. And that is basically going to be a bridge from the Ergo blockchain to the Cardano blockchain. And this is important because it drives the value of Ergo up in general because it now has interoperability with a very large proof of stake, well-known cryptocurrency, that being Cardano, run by Charles Hoskinson, etc. Now, of course, there's all the opinions on individuals like Charles Hoskinson and so on. I try to avoid those on that channel. If you are not a fan of individuals, that's fine, but that's not going to influence the way we discuss these projects or the move forward in them. That being said, Rosenbridge is expensive, to say the least. So right now, Rosenbridge is available. It kind of works sometimes, kind of doesn't. It's still kind of being developed, so I wouldn't expect any reliable use of it. But basically what you're able to do is bridge over tokens that are on Ergo over to Cardano. And you can do that over at app.rosen.tech. And as you can see, you will pick your source wallet, whether that be Ergo or Cardano. Then you can select the target, which obviously because we selected Ergo, we're going to go from Ergo to Cardano. And then you select the token. These are the supported tokens right now. And then you put in the address for, in this case, your Cardano address for it to bridge over. The crazy thing though is that the bridge fees are expensive as hell. You're talking about 6 Ergo right now to try to move 80 Ergo. And so, you know, you're talking about close to $12 to bridge over. So you're going to need a significant amount for that to really count. For a while early on, it was worth it though, but just as any other new listing, it always is kind of worth it initially, right? On the sell down, a lot of people were able to hit like making sales of wrapped Ergo, which is RS Ergo on Miniswap or whatever DEX you prefer for Cardano of up to like $4. I really got in around the $3 mark when I moved a big bunch over to sell and did nail getting that $3 sale in, which was, you know, a nice doubling of what it currently is if you are selling it on a network, or, you know, normally I think, you know, technically almost double, not quite, but double. And provided you had enough Ergo to make up for the high fee cost, it was profitable. So this is a strategy that I was talking about on Locals last night. It's too late now, really, because with the $2 RS ERG price versus, you know, the $1.74, and then taking into consideration the fees, plus the amount of kind of riskiness with the bridge being very new, I wouldn't necessarily recommend it. You could run into issues of, like, obviously it getting stuck for a long time. There's been failed transactions. It still has a long ways to go, but still very exciting to see this interoperability between Ergo and Cardano, and I wanted to bring it up. That being said, there was supposed to be interoperability for wrapped Bitcoin between Ergo and, of course, Cardano, but that now has gone the way of the dinosaur, as Aneta BTC has decided to completely drop development for the Ergo blockchain and the wrapping of Bitcoin over there. Aneta has proven to be the biggest disappointment in the cryptocurrency space of the bear market, in my humble opinion. First, having, of course, GetBlock, the mining pool that leveraged Aneta Angels, shutting down. And then now, of course, the complete shutdown of the development. And the worst part here is that Aneta basically is not paying back the Ergo to individuals that invested in the platform. So basically, the way you invested in Aneta on Ergo is you purchased the Neta token, and those Neta tokens are now all but worthless, and they won't do a swap over to CNeta, which is the wrapped Neta over on Cardano. The baffling thing about this too is the original Neta token was on Ergo, and when it moved over to Cardano, they put the little C in front of it, but now that's their primary platform. Reason being, of course, according to them, is that there is just more benefit for them being on Cardano, but you got to do something for the people that purchased the tokens that helped you develop this in the first place on the Ergo platform. So what I have linked down below, and what I'll link in live chat, is the Twitter post where they announced that they believe the best chance of success is to completely focus on one protocol instead of doing two things in that manner. And they will put all focus on Cardano. And the important phrase here, sunset the Ergo side of the project, meaning they're going to get rid of it completely. I would highly recommend you guys go over here and blow up that thread a little bit more to let them know that they need to essentially, you know, make it right with the Neta holders on Ergo. At least that's my humble opinion. And as always, I won't drop it until it's done. So expect this to be brought up every day until either Neta does not exist or they take care of their customers. Speaking of taking care of your customers, the federal government is taking care of the banks in a new filing we have. Well, in a, yeah, okay. So yeah, this is a thing, and it's 12 USC 531, which is exemption from taxation. This basically went into effect on December 30th of 2023. So it is now in effect as of yesterday. And Federal Reserve banks, including the capital stock and surplus therein and income derived therefore, shall be exempt from federal, state, and local taxation, except taxes upon real estate. So the only thing that banks have to pay tax on now is real estate. This does apply, from my understanding, to all federally attached banks. It's not just the Federal Reserve. Obviously, that wouldn't make sense. So it's any of those banks. I don't know if this actually applies to credit unions. I do not think it does, but it is something that you should pay attention to. I think it might, but somebody in chat can maybe let me know. But I would pay attention to this because obviously this means that what we are having is issues on the banking sector within the United States, which means, of course, you need to protect your assets. And some of the ways to do that, of course, is by holding real world assets, or, things like cryptocurrency miners, or real estate obviously is going to be a big one to hold. I think the problem with real estate is we got big players like BlackRock coming in and purchasing it all the way up. It's getting a little hard to function, and there are, obviously manipulations going on here to basically mitigate the effects of inflation after the pandemic influence of, obviously just printing a shit ton of money. And of course, all the money that we're sending overseas to places like Israel and Ukraine, etc. So I guess this is the way it goes. Just an interesting note that I want to bring up with you guys so you can dig into it further. Links are down in the description. You can go research 12 USC 531, which is exemption from taxation on Federal Reserve banks. Let's talk about crypto miners that have released. First, we have Rigel 1.12.1, released 3 days ago. There is, for Pirate Hash, a significant hash rate increase on 16 series GPUs, which I need to go check out, but I have not yet. For Zilliqa, calculate pool hash rate accounting for Zilliqa not being mined continuously now reflects what the pool dashboard would show. And you can add the no pool URL option to hide the pool URL from the log and display the algorithm name instead. Obviously, the most interesting thing here to test out will be the increase in hash rate on things like the 1660 Super, 1660 Ti's, etc. So that's kind of what I want to look into. I still have some 16 series. Let me know in the chat. Do you guys still have some 16 series running around in your farm? I think the ones I really need to get rid of, I still have a rig of 1063 gigs that probably need to go the way of the Buffalo, but I love those things so damn much because for whatever reason, they're my go-to spec mine, and they have paid themselves off multiple times, even though they're just old as dirt 1063 gigs. It's pretty incredible what some old reliable GPUs can do for your mining farm when they are speculative mining. Next, we have BZ Miner version 19.2.1. Now, I've been talking to iDoc a lot. He's one of the best developers to get information from. I think one of the most, I learned so much from him. I think it's, great to be able to learn a lot from him. That being said, he falls behind on a lot of his releases. I'm glad to see him start getting more releases out because we got basically a hot fix here. So it would be amiss if we didn't talk about version 19.2 as well. But for the hot fix on Dynex, they reduced rejected shares, updated Dynex proof of work ratio to be more predictable. Dynex proof of work ratio 1 will not always give best results, tune between 0 and 1 to find the best efficiency. And Dynex proof of work ratio 2 will auto-tune better hash rate and efficiency for proof of work. We already talked about 19.2 in some depth. I know from talking to the developer here, he has been, head down working on Dynex because, as he stated, the Dynex has the most, I suppose, the most potential for improvement across the board and the most amount of things you could do with it. I mean, obviously revolutionary for Dynex miners here. He's added in the, the proof of work rate or scale, right? The tuning, the proof of work ratio, which we've already gone in depth on. So I don't necessarily want to go in depth on that again, including, of course, the Intel Arc support nuances and so on. But I think that it's probably worth a shot to go ahead and check out the ratios, the proof of work ratios again. Eventually, I think what the plan for this is going to be, if I had to take a guess, and I don't know for sure, but if I had to take a guess, I would say that the importance for the proof of work ratio is going to be on the dual mining side of things. Like, let's say you want to basically mine a little bit of Dynex, but you don't want to be throwing your entire GPU at it. You can basically tune that down to only do the proof of work side and then add on a dual mining side of that to another algorithm, another cryptocurrency, which I think is really what the exciting end goal is going to be here, or end state of what BZ Miner is doing with their Dynex development side of things for that hash rate. Let me know what you guys think. Would you be interested in, basically mining Dynex on the proof of work only side if you were able to also basically dual mine at a higher efficiency on other tokens, other cryptocurrencies? Is that something you're interested in? We haven't looked at hash rate charts in quite some time, but it's important to note that Hypra, has changed. Hypra had been going down in hash rate. It's starting to recover, which I thought was interesting. You can see some new pools getting spun up here. And I think a lot of that is in relation to the activation of Shanghai. People starting to get bullish. Will this translate over into the markets? Well, it looks like it already has, with a 46% increase in price. So I'd say yes, the hype surrounding Hypra has moved over there. If we take a look at Ergo, obviously we have that initial kind of pump up in hash rate, some excitement from Rosenbridge. I think it's starting to die off again. It looks like the hash rate's starting to dip down. Yeah, with the difficulty dipping here, I'd say that excitement is starting to wear off. I think there is some disappointment surrounding the effectiveness of Rosenbridge. So we'll have to see here in the near future if it gets just, more usable. I mean, that's really the thing with these things, is like, it kind of goes back even all the way to Carlson. It's like, we're going to release an ASIC resistant network, but at the beginning it's not ASIC resistant, right? So you're like, oh, okay, well, what are you really doing here? And then it just kind of puts you in an awkward position. It's kind of the same thing with Rosenbridge. At least my experience is like, I've been able to do like maybe 1 or 2 swaps on Rosenbridge. The rest of the time I just get errors. So that can put a bad taste in people's mouth as well and kind of push that back down. And then obviously the huge pump up in price on our SERG on the Cardano side of things, probably people were looking at that, throwing a bunch of hash rate on it, being like, I can swap it over. And then now we're starting to hit price parity there again. So, it is what it is. I think that's important to note though. I am curious though, some of these other coins that we talked about. Let's look at Carlson and see what's going on with Carlson's. Actually down 25% right now. And the hash rate has all but disappeared, with most people moving to Pyron Hash, which is obviously actually not even that. It's dipped down on Pyron Hash as well. So looks like both the forks have lost a significant amount. I think with the decrease in difficulty, we'll have to see how it settles out. But with the decrease in difficulty on Carlson Hash and the announcement of moving over, I would probably start throwing some stuff at Carlson Hash personally. Let me know what you guys think about that play. Of course, I had a bunch on Alephium, but Alephium has gotten really, really popular. And as you can see here, the difficulty has gone up a lot. And you guys know that my strategy is kind of this on these shit coins is yield, right? So I can get a better yield on Carlson Hash right now than I can on Alephium. There's a few others that we could talk about, like from that perspective, like Radiant, for example, is one that I look at pretty frequently for any dips. It looks like we did have a recent difficulty dip on Radiant. Radiant might be a pretty good one to take a look at as far as capitalizing on some volume. Either way, I'm moving off of Alephium onto another one for my dual mining option, as opposed to sitting on there. I have been dual mining a lot of Ergo with Alephium. I'll probably start dual mining Ergo with Pyron Hash or Carlson Hash or Radiant, right? One of those. So that's kind of where I'm at. Another one we should look at, of course, on these difficulty charts is probably going to be Nexa. Doesn't look like much change here. So, Nex has been pretty solid across the board. I got my bag early. I don't know about you guys, but let me know in the comment section below. If we take a look at hashrate.no for most profitable, really we want to look at RTX 3070s since a majority of people are running those. I think that's the best one to look at. And we still have AI Power Grid at the top of the profitability chart. So, like I always say, you can mine most profitable and swap to your preferred, of course, your preferred coin. That is one way to do it. Of course, that is a very effective way to do it. if you have ease of access to swapping platforms, trading platforms, and the fees are not impacting you. And this is where you get into big brain kind of plays, is like, you need to know, like, if I'm mining AI power grid, but I want to buy a bunch of Radiant, what are the fees going to look like? How much do I actually get in yield if I go purchase Radiant, you know, and swap out my AI power grid? What does that look like? So pay attention to that and let me know what you guys think. I think one of the coolest things, though, in general, is we have a lot of kapow options. And obviously I am biased as hell here because, as you guys know, I have a ton of 5700s in my farm. So having, you know, one of the best algorithms for the 5700s in the 57, or sorry, for being kapow or ProgPow, just makes me happy. So because I can throw my 60 and 5700s on something and be, you know, competitive, pretty damn competitive, right? If we went to like coins and AI power grid and we went to benchmarks, as you could see, I believe the 5700s right here at 0.23 mega hash per watt. So really one of the best out there for it until you get into the, you know, either the crazy expensive CMP 170HXs or the new 6000 series. I am going to be testing out the 7000 series coming up here very shortly because there's been a lackluster amount of testing actually going down with the 7000 series. That's going to be coming out to the farm. I'm rebuilding the studio right now. I started that yesterday. Today, after this live stream, this entire temp setup is getting torn down, moving the pieces of it I need out to my studio, getting that reset up, and then we will be coming at you all with basically higher quality, more content, that sort of stuff. It's going to be a little slow building up, though. I got to rebuild that whole studio, so be patient with me as I get into that. Let's get into questions and answers for today. Remember, super chats never required, always appreciated, first to be answered because they highlight the shit out of it on YouTube. In addition to that, tagging at Son of a Tech will highlight the message orange, making it easier for me to read and therefore easier for me to respond to you, and more likely that I will respond to you. So keep that in mind. I'm going to pop out the chat now and get it going. So I think the first thing is Alexandre says, what do you think about Pyron? Worth to mine it? I mean, anything is worth to mine it if your power cost is covered and you're making profit off top of it. I try not to look too deep into it other than maybe yield. And then I kind of just build bags up from there. I think it's very important to not stay too biased towards any particular cryptocurrency one way or the other. You never know exactly what's going to happen in the future. So to pre-bias yourself is going to put yourself in a position to basically lose out. So I shy away from that. You know, the reasons why I would not care about Pyron as much as it doesn't seem to be a huge driving force behind it to, you know, go ASIC and FPGA resistant. That's why I kind of prefer Carlson hash versus that. There are some things about Pyron though that I think obviously from a retail perspective seem to be more attractive. So there's those things to take into account as well. Nuno says, hi, Son of a Tech. What are your thoughts on Radiant in 2024? Do you think it's worth a project to invest in? So, you know, obviously I don't give financial advice or basically any purchasing advice ever. I realize that we have people that watch the channel for information on cryptocurrency to make purchasing decisions, but it should be clear that that is not the intent of the channel. So when you ask me if I'm going to recommend that you purchase a cryptocurrency, I'm going to say no. I'm going to say mine it, right? That's what, you know, that's why we buy graphics cards and stuff, because then we can mine it and then we can go from there. If you ask me, have I mined and do I have a bag of Radiant? I would say yes. And I am not selling it and I'm holding it and blah, blah, blah. So there you go. Son of a Rabbit Panda says, as Son of a Tech, do you have any New Year's resolutions? Mine is to start training again. I would like to get back into training more, but no, I do not have any. I never do New Year's resolutions. I just don't. It's not something I don't think it's an effective way to actually improve your life. I think it's the fastest way to fail. In my humble opinion, at least in my experience, the best way to change your life is to just start making daily small changes that you put you in the direction that you want to go. So that's kind of what I do. The direction that I'm heading for, of course, is rebuilding the studio and being able to do YouTube again. And hopefully maybe in a couple of years, we'll be back to doing YouTube full time and I can really focus on increasing quality is really what I've been mostly focused on, because obviously over the past year being sick, having this temp setup, having to use a green screen with a webcam, and just everything going on, I haven't been able to be at the quality of content that I want to be at. So that is really what I've been pushing forward to. Seven Ho says, Ho math, says, that's Tech. Thank you for everything, sir. Thank you for chatting, sir. It says, you're the real hero versus all the spam accounts I see on social media giving praise to other scammers. I'm not gonna, I mean, look, man, here's the, like, it's so hard to navigate the space. I get it. It can be like extremely frustrating. And I think a lot of it has to do with like people trying to make money. I mean, really at the end of the day, and it's a difficult thing. You know, I catch flack for running locals and running, you know, selling the Ecourse. People are like, oh, you just want us to pay you on locals and on the Ecourse. And well, yeah, I do, because I want to reduce my reliance on sponsors. Meanwhile, they may have sponsors, and the sponsor capture is very dangerous, I think, in the crypto industry. So I'm trying to figure out a different way to monetize, essentially, is what I'm working on. And so you just have to let all that kind of stuff go. But I completely understand the flip side of that, which is like, I'm going to go the sponsorships route of things, right? So that I don't have to rely on the audience to pay, and I can give it to the audience for free. There are multiple strategies here, and I'm not going to say one way is wrong and one way is right. I'm just going to say the way I go is this way, and then the way other people's go is another way, you know? So that is kind of how it does. The thing is too, also, I love the locals platform because of the articles and me being able to actually write out detailed guides with, you know, command line arguments and all that for you to copy and paste out easy. And I think it adds a ton of value from that perspective. So I think I put in a lot more work doing that than just taking a sponsor and throwing it in your face over and over again. And that's kind of the way I work at it. Obviously, we will still have sponsors as we get them, and ones that I agree with and so on. But the ones I really try to avoid are the ones that pay a lot, right? It's like the coin sponsorships, the exchange sponsorships, mining pool sponsorships, those types of things, where I feel like there's a little bit of a gray area, and I don't know that I feel necessarily comfortable moving forward with it. It doesn't mean that I think that pool or that exchange or that coin is a bad coin pool or exchange. It's just my policy has always been kind of be extremely careful when it comes to that. You get in a lot of trouble, essentially. Got a $2 super chat from Tricky Mick Trucking. Says, how do you feel about the spiral upgrade on Ethereum Classic? I haven't kept up to date with it. I mean, thank you for the super chat, but I really wish I had an answer for you, but I don't. So it's hard to cover everything, man. It just is. Helix says, Ask Attack, a 16X 3060 Ti or a KS1. Which one sounds better at 16 cents electrical? That's really going to be up to you. Once again, what are the benefits of GPUs over ASICs? Right? So the benefits are that you can mine multiple currencies. With the KS1, you're only going to mine Caspa. If you look at the net hash on Caspa, it continues to skyrocket. A KS1 is just, in my opinion, not going to be that fucking competitive. And so you know, you're going to spend more money though at 16 cents, 16 cent electrical on those GPUs. But the other thing is like, I think the 3060 Ti's will go up in value, and the KS1's going to go down in value. So if I look at it purely from the actual investment in the hardware and which one's going to increase and which one's going to decrease, I would say the KS1 would decrease in cost. And I would say the 3060 Ti's will increase in cost. That's how I would look at it. But there's those other things to take into account as well. What is the equivalent for the G Pro X80 or 6700 XT? I'm trying to remember the X080. I have a review of it up. I can't remember off the top of my head. I thought it was the 6600. Almost positive 6600, not 67. Trying to remember. I thought it was. Anyways, there's a review on the channel of it. Thanks everybody for watching. Be sure to hit the like, comment, subscribe, and notification bells down below. Check out locals at sonofatech.locals.com. Tomorrow, the pricing on locals goes up from $5 per month and $60 a year to $10 per month and $120 a year. If you pre-buy a year right now for the $60, then you will be good through the end of next year at that price. If you wait until after tonight at midnight Central Standard Time, well, it's going to be a higher cost, and that is really where we're at with that. In addition to that, don't forget to check out my e-course at sonofatech.com, and I will see you next Tuesday. Oh, by the way, if you become a member on locals right now, there's a pinned post that'll be good through the end of tonight for a free e-course as well.